Good morning, good traders. Welcome to the Flow Show. Bank of Canada Day, 23rd of October. At least that should give us something exciting, hopefully. But there's lots going on otherwise. Morning, Kay. You all set up with your loonies?
Good morning, Ryan. We are in Looney Tunes territory now. Yes, we are ready.
Good, good. We always need to be ready. Right, let's get stuck into it. Lots going on, including good old dollar yen, making mincemeat of the levels at the moment, but we'll get to that in a moment. FT were out with a piece on foreign investors saying that they are piling into emerging market funds that cut out China exposure. This is part of the issue that we've been banging on about for a while. It's all well and good them propping up their economy with tons of easing measures and fiscal measures, but until they win back foreign investors and people are confident to invest back in China when there's no geopolitical kicking offs, that's one big problem they have to deal with, because that also filters through into trade as well, and they're a big export country. So a lot of people still shying away from China. Over in Japan, not a lot coming out from there at the moment. Obviously, they're in full-on election mode. But Kyodo News had a survey out of voters' top priorities, just to give a bit of insight on what they're looking at. It's certainly not the level of dollar yen. 60.8% said inflation relief and other economic measures are the priority. That was the top priority. 36.7% said pension and other social security issues was a priority. 23.8% said childcare support was an issue for them. And on the subject, has been a fairly big subject, obviously nuclear power and other energy sources, obviously since Fukushima, that's been in a lot of people's minds, but not for this election. Only 6.7% see that as an important priority for this election and the new government, or existing government as it's likely to be in whatever form. So just as I say, a little bit of insight in what boots on the ground are seeing as their important points from this election. Once the election is all over and done, the LDP party, maybe getting ahead of itself, depending on whether it can secure a majority or a coalition, says it's going to convene Parliament session for November the 7th. So it's going to be a few more days after that, right bang on the US election, when they will start to convene Parliament after that. Once again, just a reminder, if you're worrying or wondering why we've not had all the finance ministers and FX diplomats and all the rest of them popping up to talk about the yen, it is partly because Parliament has been dissolved, so they're all in campaign mode, election mode. But that's not to say they aren't watching what's going on. And that's not to say they won't intervene should they see fit. But it all depends on whether they decide whether they're seeing speculative moves or moves from outside forces. But just don't think because they're silent, they're not keeping their eyes on the screens. Over in good old UK, BOE's Green repeated that cautious and gradual approach to rates is the best way forward, but said it's more likely that policy needs to bear down on inflation. Said she wouldn't put too much weight on the latest decline in UK inflation, as it may be driven by volatile components. Says the BOE pays attention to what's happening with the Fed's curve, probably more so than what's happening with the UK curve, no doubt. Over at the ECB, it's been another day yesterday of talking heads. One of the big doves, ECB Centeno, says that he still expects inflation to tick up, but probably won't see inflation much above 2%. Another one joining the warnings about undershooting inflation, says undershooting Eurozone inflation target is a new risk and could stifle growth. Says need gradual, steady and predictable reduction in interest rates to a neutral level. It says data will indicate if we have to do 25 or 50 BPs. It says if the data suggests a faster trajectory, the ECB will consider it. He's pegging his neutral level at 2% or slightly below. Lagarde popped up as well, saying inflation numbers are relatively reassuring, but we cannot jump to conclusions that it's a done deal, talking about whether inflation is over and getting back to target stably. She's not putting a number on the neutral rate, says she doesn't know where it is. One of the big hawks, ECB's Holtzman, says disinflation is going faster than expected. That's a particularly dovish comment from maybe the biggest hawk at the ECB. It says a cut was appropriate and others are expected to follow. ECB's Villeroy was the first one to raise the prospect of undershooting inflation. He was speaking as well, saying inflation could be at target early 2025. And that inflation persistence is no longer the sole and dominant risk. It says ECB is not behind the curve, but the risk of cutting rates too late is bigger than cutting too early. Also says it's too early to say where the terminal rate may be. Ollie Wren says the growth outlook has weakened and could increase disinflationary pressures. Rate cuts are coming, and the speed and scope of those are to be decided later. The point by Wren is important and one we've been talking about here on the show often enough. When you've got a weak growth environment, that isn't a boon for prices. So that's when you're not doing a lot of business, you start cutting prices to capture that business, and then you go from lower inflation to disinflation and then into negative inflation. Not quite deflation, but when you start seeing real big negative numbers coming into inflation. ECB's Nagel, he's dismissing the ECB moving to a Fed-style dot plot as a forward guidance tool on rates. I think that's something that's still bubbling up, Kay, isn't it? That once things have settled down a bit, inflation's at a normal level, rates are at a normal level, they're all going to start considering their policy frameworks.
Yeah, that's one thing. Also, regarding that dot plot, personally I wouldn't go for it, because let's not forget that in Europe there are some really diverging economies also. The dots could get a little messy over there. For the rest, yes, framework. I thought they just had a bigger framework revision at the ECB. Perhaps one is not big enough, and they want to guarantee their jobs. Took a while, but Ollie Rehn and Holtzman finally came over to the dovish side. They needed all this conversation, all this confirmation going on. And we still have to wait for what Lagarde is going to say again today. I think she's speaking again today. But you know, I think she's been clear enough that she doesn't know where this is going. Also, people are saying she doesn't close the door on 50 BPs. She also didn't open it, in my opinion. So we're still very much cutting rates on in a gradual way over there. That's how I view the whole ECB thing, and the speakers so far haven't changed my view on that one. Coming back on this Japanese election and the yen. As you say, it's not because the parliament is closed right now that they can't intervene. And as a matter of fact, we are again 200 points higher than where we were yesterday. Recall Kuroda in his good old days saying that moves between 200 to 300 points in a day are thought to be excessive, and we've just ramped higher, those 200 points, and even in excess of 200 if you look at it from the lowest of the day yesterday. So yeah, I think we're in danger territory now on the dollar yen.
Yeah, thank you very much, mate. Final line on the ECB, a Reuters piece out yesterday said that ECB policymakers are starting to debate whether rates will have to go below the neutral level in this current easing cycle. According to them, they had 6 sources talking about this one. So it's all starting to come to bear. Been saying this for the last couple of weeks. The big risk for them is that inflation undershoots, and also that they have to cut rates to become stimulative rather than just less restrictive. And it seems those conversations are already starting up. It's not a hard leap of faith, that one, given how flatlining the Eurozone economy has been as a whole. Yes, there are exceptions, countries like Spain and whatnot, but if you look at just the pan Eurozone numbers, it's been 0 point this, 0 point that, pretty much for over a year now. So they will be talking about this, and it just shows you the difference between the Eurozone and the US, where the US is still ticking along with half decent growth. But at some point, something's going to give in the Eurozone, and I think the risk is that rates do end up going lower than the neutral level as they try to chase growth once more. Main King, yeah, I'll answer that question in a moment, sir. Looking at a bit of the data that we had out yesterday, not any big ticket items. We had the Philly Fed Services Index, which improved from -6.1 to +6%. Employment improved as well to the highest since June. That rose to 8.7 from flat in the prior month. Prices paid also jumped, 35.4 versus 19.5 previously. New orders also improved to +15.4 from -17.8. Wages, that all important component, dipped a bit to 32.8 from 34.6. So the first services number from the US looking pretty good there. We had Canadian PPI raw material prices as well, all coming in with some big soft numbers there. Much lower than expected month on month, much lower than previously in most of the measures there year on year, especially that raw materials price, they're down 8.8%. So plenty of disinflationary pressures for the Bank of Canada. That did no harm in cementing the 50 pip cut calls for today, which is what's largely expected. That's about it I've got on the headline front. Kane, have you got anything else to add?
No, nothing really special, right?
We're not going to touch on Trump working in McDonald's for 20 minutes.
Not then, really, no. And
10 states coming down with E. coli from quarter pounders after that. McDonald's in a bit of a mess. So draw your own conclusions from that one.
Yeah, go for the filet of fish if you go to McDonald's. Stay away from the quarter pounders.
Right, so we have got the BOC today. If you've been following the show for the last few days, you'll know our thoughts of it. Expected to go 50 basis points. Again, we're in a situation, there's reasons why they could go or should go at 50. There's also reasons why they might not go at 50 and go at 25. Do you think that PPI data changes anything yesterday, mate, in terms of those expectations?
Yeah, well, perhaps we do have to go with the majority at some stage, but yeah, PPI is PPI, and it's always more volatile. But let's say I'm not going to stick my neck out anymore. I was more in the 25 BPs camp, but yeah, they can go both ways now. Most of the market expects 50. But the CAD is still relatively stable, right? We haven't gone too much further over the past session since Monday. It's been relatively quiet, and the market is waiting. So I do trust that there is an element there that if they would only do 25, it's probably going to be a dovish 25. But the action of doing only 25 could underpin the Canada a little bit. If they go 50, then it depends what they say. If they go 50 and McClem stays on, or the statement goes on the dovish tour again, then I suppose Canadian dollar is going to get hit again, right? But anything less than that, I would say stable to perhaps for once a little less bearish on the Canadian dollar on my end going into that meeting.
Yeah, very much so, mate. And just looking at dollar CAD quickly, it's stopped going up for now, which is probably a bit of an indication that the market doesn't want to push it too far ahead of the BOC. And it's maybe a bit strange because this dollar pair has had such a strong run, but it sort of went before everyone else, and now it's paused a bit. You know, euro dollar's continuing to fall, cable's been falling, but this one's decided to put the brakes on. Is it just pausing for a bust up, or are we getting near a top, do you think, mate?
That's the question of the day, I suppose. As I said, I mean, yeah, if they do 50, it's probably going to go further because there's little reason for the Canadian dollar to materially strengthen. But on the other hand, I think one of the reasons that it's stopped now, despite other dollars continuing higher, is the proximity of the US, and that is perhaps why it stopped, and the market just pausing. You know, I mean, to drive a currency pair, you need a direction, you need flows, and if the flows dry up, maybe the market is just happy to sit where they are, and now we wait for the Bank of Canada decision to do the next leg or leg lower or so. I would suspect that on a very dovish 25, we may around 137.5. We may see buyers coming again on the dollar Canada. Those who have waited for the announcement. But yeah, I mean, I trust that the flows will come out of the woodwork again once we get the decision right.
Yeah. I mean, beginning of this week, I was thinking, you know, dollar CAD, if we're expecting a 50, we might get a little pop, but it might be a buy rumor sell fat trade. But given how the dollar's been strengthening pretty much across the board the rest of this week and dollar CAD hasn't, maybe now leads me to think that it's just waiting to get a confirmation of a 50 before it then decides to keep going up. So I'm less in the buy rumor sell fact camp and more in the maybe we're just pausing, as I say, waiting on that confirmation of a 50 before kicking on again. Overall, I think if I'm going to trade this one, I'm going to trade it a dip buy if it's a 25. I think if it's a 25, you're going to see a pretty hefty dip in this one. And then if the dollar is still strong everywhere else, I would be expecting this one to reverse that dip pretty quickly. So I think sitting here today, going into this meeting, I think I'm potentially going to look at a dip buy in this one, maybe down to that 137.35 area if we get there, or at least around, like you say, 137.50, just into this zone here. I think that might be worth having a little tap, but we shall see what comes. Right, Main King, is that your real name, mate, or is that just a name that you've put up for the coming in here? But he's asked a question that can, I assume you're talking to us, that can we share at least one complete trade record showing where you did enter and exit, on which platform, position, lot size, blah, 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 blah. Right. First things first, a lot of people will not tell you their position size, monetary values or whatever. That's just one of those things that people keep to themselves. We're not here to boast. We're not here to, you know, claim richness or anything like that. We're here, and certainly the team at ForexAnalytix, we're here to show you how we trade, not for the purposes of showing records or anything like that, but just to show our mindset, how we come around to trades, how we assess trades, manage trades, that sort of thing. It's from an advice point of view, not any sort of signal service or anything like that. Now, if you want to see exactly what we do, then obviously you can come into our chat room. We have this dedicated trades room. Okay, it's where we encourage traders to put their trades. Again, not just to come in and say, after the event, I bought here, I sold there, I made this amount of money, because that helps no one. Okay, what we do is we ask people to put in their trades in good time, not half an hour after the event, but as it happens, just to show the thinking behind the trade. Okay, so I'm just going to show you. You can see Kay there's been putting up some bits and pieces there. I'm just going to show you one where I took my gold trade. Okay, so giving gold a go here. So you can see 4:08 p.m. When was that? October 9th, October 10th, whenever it was. Okay, so this went in at the time the trade was done, the reason for doing it. There have been other analysis in our chat room. Then you can see where I've started slicing, where the trade, I've started taking profit on the trade, and then, you know, I keep this updated. Other trades, took a trade live on Face on the 10th of October. So you got that live on the show as it happened. And then updates on what's happened to those trades. Other trades, Aussie long, that went off the stop, got a bit away, but then got stopped out for the rest. Okay, so if you want a real insight into trading and what we're doing, this is where we do it. Yeah, this is real. Okay, you can see my trade entry there. If I take a trade and I couldn't get into the chat room to update it live or as quick as it happened, then I and others will put their trade entry. So you can see there, direct from trading platforms. So we're not here to fictitiously trade. We ask people to put in their trades and how they manage their trades. Okay, but it's for advice purposes. Okay, it's to show the thinking. Why am I cutting some profit here? Why am I entering here? What am I looking for? Management, that sort of thing. So this trade room, yes, it is a bit of faith that people put their stuff in. Hence why we suggest that people do it in good time. Okay, so it isn't after event analysis. Okay, anyone who comes in here and says, "Oh, I bought gold 2 hours ago at 27.30 and I'm taking profit at 27.50," then we'll have a quiet word with them and say that's not what this room is for. So if you want to see what we put into action, what we say on these shows, this is where you can see it, and this is the purpose of the room. And as you can see, lots of updates from everyone, what we're looking at, levels they're looking at, all sorts of stuff. So you won't find this sort of analysis or this sort of chat room in any other places. Okay, Jacob, yes, we are doing mentorship. You can check out this here, Trader Coach, and I'll put the link here. Oh, if I can grab it, I'll put the link in the chat box there. So this is our mentorship program where you can grab a member of the team, whichever one you fancy, 1, 2, 3, all. It's up to you. There is a current discount. Might as well flog that while we're on it. You can get 40% off your first session. Okay, so 40% off your first session, and then there's some package deals if you wish to continue. But what you can do is you can contact the coach. You can see what there's the discounts there. You can see what times they have available on their calendar. And if you've got any questions, okay, fill out the box here, send a message, that'll go to the coach. You know, if you don't know how the sessions are conducted, if there's various questions you want to ask. So we can have a little bit of a conversation to find out exactly what you want from the mentorship program, okay? And then we can tailor each session to the person's needs. So that's one thing you can look at. And Maine, I hope that's answered your question there. Don't forget, you can come and join us in the chat room. Go to ForexAnalytix.com. You can pay $1, get 10 days access, and you can see everything that goes on there. And as Gavin says, it's not just that room. We obviously have our main chat room where most of the analysis and talking about markets is done. We have a news and research room where we put up all the important headlines and other things. So, you know, if you're not sure, mate, you know, come in and have a look for yourself. It'll cost you $1. It'd be the best dollar you ever spent. Come and have a look, see what you think, and also give us your feedback as well. You know, we're not just here to tell everyone what to do and how to do it. If you want to see certain features, if you want us to discuss things, you know, come on in and come on, Ali. It's $1. Really, you're going to turn your nose up at $1? Is there any way to get in the room for free? Yes, there is a way to get in the room for free. You can win in the NFP competition, or you can take a trader funding program account and get free time on the chat room. See, I've got an answer for everything, mate. So yes, you can get in there to free. Right, let's move on, get into some of the price. Or less, Kay, you've got any comments to add to that and our trading and why we do it?
First of all, this show is not made to build any track records, or we talk about the markets, we talk about what's going on, we talk about what we think that may happen on events or in markets in general. And regarding the sizes we have in ForexAnalytix, and we have done that since Ryan and I met back like nearly 8 years ago now. We decided from the start that we would not give any amounts, because IDs for trading and positioning should not be linked to an account. We don't want anyone in the room go either saying like, well, what am I doing here? You guys only trade like a $1,000 or $5,000 or $10,000 account when I'm throwing around millions, or the opposite, having people trading smaller accounts and then looking at other people throwing money around and say, what am I doing here? I'm not worth being here. The purpose of what we do is to really help everybody, including ourselves, because we have conversations with people in our different rooms, which are all extremely interesting, and we do learn as well every day. But it's not the purpose of showing what exactly our track record is. If you are in our room and you follow what we update, there is you will have enough of an insight on people's track records for those who put their trades on. And to be fairly honest, I'm not even putting all my trades on. Some I really trade very quickly in and out on some currency pairs, and people know that. But the main stuff there, and if I can enter like really when I do it, I'll put it up as well. But the purpose is not for going to judge people on what their track record is or how much they can trade. You know, it's really to help each other out, and therefore as well, we are all. If you look at what Ryan is showing there, our mentoring program, there's about 200 years of experience in the market there. Okay. I've been in the markets for more than 40 years, and other people have been in the markets for 20, 30 years as well. So that for the mentorship, we are all old and scarred enough to know what to say and how to trade the market. So that for a little bit of addition to what Ryan already said.
Yeah, thanks, mate. And I'll just finally add, it's not just about the trading side of things either, like what trades we take. We have all levels of experience in our chat room. Okay, no one is there's no pigeonholing people. Okay, if you might have been trading 5 minutes, or you might have been trading 50 years, it doesn't matter. We have all those people in our chat room, and everyone's there to help everyone else. There is no stupid questions. As I like to say, the only stupid question is the one that's not asked. So if you're in our chat room and you have a question you think is the most noobish, silly question in the world, and you feel a bit too proud to ask it because you don't want to be seen to be a noob, don't worry about it. Ask it. Get your answer, and you will find people, not just the team, me, Kay, and the rest. You'll find other traders in there ready to help you out. So that's what the community's for. No egos. Yeah, exactly, Gavin. So it doesn't matter what your level of experience is. If you want help, if you need help, then the chat room is probably your first place to go to try and get that, and then expand from there. But anyway, sales pitch over. Right, let's get into what else is going on. Let's have a look at the old dollar yen, which is moon shooting. and this is exactly what I warned yesterday. How many people were going to be waiting for 152 to give it a go on the short side? And we didn't even blink there. We had one little 15-minute candle just below it, and boom, we then just went through it. We have had a little hold on a retest though, which is potentially significant in this move, because it's just shown that we're going to hold that break and keep going. But this is a very fast move. We know dollar yen is, still contains high volatility. I thought it might have been coming down, but obviously elections here, there and thither are keeping the vol in there. We're seeing a vol jump across the board at the moment. Let's just give you a quick indication. I'll take us over to our dashboard where you can get things like the option rates there. So these 1 month vols we want to look at, we were getting down to the low fives in euro dollar at some point. Now we're up over 8%. Same for cable, dollar yen, 12.82. That's been where it's been between 11 and 13% for the last few weeks. So vol is still high there. So we are seeing volatility picking up across the board. So dollar yen's had a jump. Where can it go to from here? I think it's a case that, as we said yesterday, you need to be careful at the moment. We are seeing what you could be classed as maybe some irrational moves going on. And when you get moves like that, it doesn't give a monkeys about coloured lines on your chart. Hence why it didn't give a monkeys about 152. Will it give a monkeys if we get to the 61.8 fib, 153.40, which is a bit of a level on its own? Who knows? But at the moment, don't put as much faith into your techs, okay? Because we're moving on geopolitical events, both Japan in this case and the US and everything else going on. So just be a bit cautious. The seas are stormy. So if you're going to go for a little paddle, make sure you use some caution with it. You want to short up here, the 61.8, fine, go ahead. But don't wait until 155 before deciding you're wrong, okay? So just be careful is all I'm saying for this one at the moment. Yes, we could get intervention coming in, or at least maybe some jaw boning. I think if we're smashing up through 153 in this fib today, then we're definitely approaching higher DEFCON levels, shall we say? Kay, what are your thoughts on this one? Where's it going to stop? Let me put you on the spot again.
I think we are now starting to push. Testing the officials perhaps, and I said, like, if it goes 152, that 61.8 is the next one up. I've got like small level around as well at 3.75, but I'd stand in front of the train is really now hoping for interventions, and again we are back into that mode of trading and mood, I would say. If you wanna do it, so be it. But the risk for the upcoming election and the Bank of Japan, the attached Bank of Japan, we haven't heard from Ueda yet out of the G20. We may hear from him at some stage, yeah. So there may be a bit of a more cautious approach there that we need to have. But for the rest, where is it going to stop? Look back at what we did prior when we broke 152. We just went on and on and on. The thing is, we've got stable JGB yields. We've got the US 10s running at above the averages now. We're above that 420 still. We're seeing the rest of the dollars coming down, especially if you look at stuff like the euro. It's all helping the dollar yen, right? So I'm still not going to stand in front of it. That is for sure. I thought that this may happen, well, at least up to 152. That's what I've been saying for a while. Now we're above. I'd say if you want to look to the other side, if we start to break back below 152 and what did I say, 151. 40.50 or so, that's where we can start to talk about perhaps a yeah, 140, 141 and a half, 151 and a half, sorry. That's where we can start to think about failure of the 152 break and a bit of a reversal. But as things stand, without interventions also, that's going to have to come from a weaker dollar, and that some numbers will probably decide, but we don't have any like serious data before tomorrow, right? Yeah, tomorrow we
Yeah,
start.
yeah, we get some housing data, but
Mm.
that's hardly going to send things meaningfully one way or the other. Yeah, you mentioned Japanese yields. I was looking, saw something that we'd got a record high in 30 years, I think it was.
Really?
So we're
I
seeing.
haven't looked at the ultra long.
No, we haven't. So was it 40 years? I can't remember. I saw a headline
Yeah,
flashing
it's
across.
probably since yeah.
Yeah, I
Well,
think it
I
was 40
mean,
years.
good luck trying to find many people doing 40 years. That actually the Japanese whales do ultra long. Um, but I'm not sure how big that market is, for
No.
anybody else than the Japanese.
Yeah, but certainly tens are not. Well, they're up testing that 1% area. They've never been
Yeah.
above it for too long
Mm.
recently. So it's following this yield move. So what's going on with yields? Because is it the Trump trade? Is it obviously Japanese yields and everyone else's yields rising is not US economic strength. Is it just a little bit of risk offness in terms of people want a premium for lower growth now, or what's the story, do you think?
No, I think if you take Japanese yields, they are waiting for the Bank of Japan to show them the way through. Let's just stick on the 10 year. They want the Bank of Japan to take it up perhaps to 1% on the short end or closer to 1%. Get those Japanese yields, get those that 10-year yield. Hopefully, I'm not sure if they want to really inflation to shoot higher, but hopefully with better growth also outlook, we could get up to 1.25. But then the Japanese whales have already indicated that the next leg higher, decent leg higher in the Japanese bond market, they will likely start to get more interested again in buying them. So the problem with those Japanese yields is that unless you get like really very good growth on a sustained basis, it's going to be tough to get them really a lot higher unless we get some forced bond sell-off globally, which is still possible on the US elections. But that will be a move in sympathy with the US bond market, not really what's happening in typically in Japan. If you see the European yields and the differential with the US yields are deepening again, right? We were at some levels when the euro was rebounding we got to tighter differentials, but now they are widening again. So a lot of it is US, a bit of copy paste on the rest. But if you look at growth numbers in Japan, they could be interpreted as somewhere hopeful, but not really that positive again. We see too many data where the 1 month you get a really good number and the month after you're giving it back. So
Yeah, thanks, mate. Just going to bump back quickly to dollar CAD because Ali's in a trade in here. I think I don't know. Let's have a look. What are you doing in dollar CAD? You were short, I think. No, long dollar CAD at 20s. Okay, so you're right, long here. I think you need to be careful, Ali. We got the BOC coming up. It might be a 50, it might be a 25. Okay, that could be 100 pips either side in a quick spike move. Okay, so just be careful with that one, mate. You're in a position where you're trading into a big risk event with pretty small margins in terms of profit target, stop target. You could be flipped either side of that before the announcement, just on squaring up and positioning before, you know, minutes into the event. So just be careful with that one. Euro dollar, I see you in that one as well. This one, it's doing nicely, playing nicely with the tech. Okay, we're now through this 30 zone. We're now under the big figure through this smaller zone down here. This is a bit of a line in the sand down into this prior low that we got back in August. Okay, that was a pretty decent bounce, so it needs to be respected. But the way we're carving through these levels at the moment, if it don't bounce here, then as I've been saying, we're probably heading to 107. And given the mood, maybe that's just a minimum. 107 is about the only place right now where I'll try and give it a go. I gave it a little go yesterday. Got stopped out of that, just a small trade playing into the big figure here. Didn't want to stop, so I got stopped out of that, and I'm not really interested until we get down here. We do have a level around 107.60, which is just a bit more of a sort of on-off level that we've played quite a few times. Not maybe one I'd trade, but it's one of those ones, you know, something might happen here at that 60 level. Another one down 107.25, 30-ish, 20, 30-ish. Again, as you can see, on-off, support, resistance. As you tend to get around a big figure. Now, the 107, let's put it in a bit of a clearer chart if it's on there. The 107 is one of those big old levels, okay, that we've had plenty of action against. So you just need to make sure you respect that. If you're short and you get down there, that may be an area you want to try and take some profit off in case that's where we bounce from. But it is a very significant level. Under there, well, then maybe we're heading down to 105s, but a long way to go before that. So what can turn this around? We really need a big change in sentiment, and I don't see that happening anytime soon. But it doesn't mean we aren't going to see some bounces. Really, we still need to break above all these levels. Probably 109, 30, 40 is the key area here. We're not changing this trend until we get above there. I haven't even bothered chucking a fib on yet because we keep making lower lows. So I'm not even ready to start measuring that pattern yet. So it's not ready for bouncing yet. It'll bounce at some point. You just got to be careful where you want to pick your battles for this one. I'll have a quick look at gold, then I'll bang it over to Mr. K. So we stopped Monday, 27.40. We went through yesterday, and then this morning we've, give or take a couple of bucks, we've held it on a retest. Okay, so 27.38.40. You're not going to moan about a $2 difference or a $2 level when you keep tacking on 20 bucks every time you wake up in the morning. What this move has probably done though is it's going to cement this area down here, 27.13 into 27. It was just a one-touch support area. This was one of the areas where I thought this may be where we get a bounce on a test. We did. So now there's going to be longs off of here. They're going to probably protect that if we have another move down. So maybe expect some buying around the 15-20 area. That'll be the perfect scenario for longs, that you see a move down to there, not quite that low, and then we get another bounce and off we go. Either way, this is your short-term key level, and it is short-term. Okay, it hasn't got the price history like we had at this level here. Okay, so treat it for what it is. It's a very short-term intraday level at the moment. But I would suggest that's going to firm up a bit if we get another move down here. This is your short-term level at the moment. If we're back under there, then maybe we're going to start making a bit of a high, however long that lasts. But for the top side, I know Kay's got a fib extension here, but for me, I'll wait to see until such time as we have multiple tests of a high and we can't get through. That'll tell me we've got a potential top in play for now. So until then, this can continue going, and we just do the exercise of drawing lines and seeing what the price action wants to do. Right, Kay, over to you, mate.
Yeah, looking at the time, I'm just going to show a couple, and I just wanted to show one thing again, okay? If people, because sometimes I speak about interest rate differentials, and some people who are newer into the market may not know exactly what I mean. Well, this is what I mean. If you look at the 2-year differentials in the euro dollar and you overlay it with the euro dollar, with the euro and the US rates, actually I could take the German rates. I used to do the German rates, but I've moved over to the EU rates because it's equally good enough. Look,
Is that because Germany's so screwed, mate?
yeah, as well. Look. When I say that both are working together, when I say that the interest rate differentials have widened, that means that there's a bigger difference in negative territory. EU rates are lower than US rates. They're always lower, and it's for sure not a watertight thing to use. But if you most of the time overlay euro dollar over a certain period with the differentials, that is what you get. So that is pretty close and pretty good enough for government work, as they say over in on the other side of the pond. For the euro to materially bounce and go up, this is probably going to have to turn as well. Okay, how will it come? Well, it can come from the dollar, that yields are coming down, or European data improving, all right? But I always keep a very close eye on what the differentials are doing. And you could do the same with the yen. US rates have bounced, and the 2 and 10-year Japanese yen, but people usually use the 10 years. They have been very, very stable. So the differential has increased and that is putting a bit under the dollar yen. So whatever picture you want to look at, draw lines on pairs, draw extensions, FIBs, whatever, have a look at what the differentials are doing, because they are really moving closely together with what happens on in the euro dollar. So look, for instance, in around the 20th of September, we topped out, and a few days later, the euro dollar topped out, and we started to go down again. So sometimes this thing may actually be a bit of a leading indicator as well. But just to show you what I'm looking at a lot of times as well. There is today you're talking about oil, and I borrowed this drawing from my dollar yen chart, where I put it in the bin. Actually, just transferred it from dollar yen to oil. Look, are we doing this? I know that purists of this kind of pattern will tell me, oh yeah, but it's probably not a real one. But there could be something going on here, and that for as long as we stay below, I'd say 72.5, stretch it to 72.75 on oil. We had a move back above 71.85, which is the 50% of this move. Seems to have a pretty decent interest every time we go into the 72, 71.5, etc. But it could be that if we have seen a bit of a top here back in those 72s, that we are perhaps building on a little bit of a head and shoulder here, which if we get down under 68.5, it would probably be bad news for gold again, for oil again, sorry. Okay, so this is perhaps a potential thing that is building. If you get back above 72.5, markedly above 72.5, the party may be over for the bears, and this thing is going to shoot again. But until then, this could be developing. Okay, silver. Well, I've pulled the trigger, and it's just because I don't know until where those metals can go. As I was saying in the room, we can still have like a blow of top move and trade silver even up at up to 40 into the elections. The bigger the advantages of Trump, it seems, the more metals people are buying. But I think the 35 is big enough here. 35, 35, 15. Don't don't take this 35 11.8 as a real level. Okay, those metals, those things, they do tend to fall a bit short or overshoot, so it's just a guide level here. But I decided to take a fair bit of profit now on my longer term longs, and I'm going to sit back, enjoy, and watch the picture a bit. If ever, now that I've taken that much profit, if ever we come back to, and I would say start around 32.80 down to 32.5, I may start to reload just a little bit, and especially if we get back into this zone in the low 30s, I'm probably going to buy a bit. Again, I'm not going to go full positions ahead of the US elections, okay? I'm going to keep things a bit on the safer side. And that's it for today for me. Ryan, back over to you, mate.
Thank you very much, mate. Yeah, we'll call that a day. And it's been a good session today. So I hope you guys and girls have enjoyed it. We certainly, both of us, appreciate you being here and following us here and giving us your comments. Always nice to talk to you guys and girls. So have a great day, everybody. Trade safe over the BOC, and we'll see what's happened tomorrow. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.